So the fact that we don't have credit purchases but we have trade payables, the opening balance and the closing balance, so we shall use these to get credit purchases by preparing the trade payables account. So the trade payables account will help us to determine the credit purchases. We already have the cash purchases of 51 million, so we shall determine the credit. So trade payables is a liability, and liabilities have a normal credit balance, and they increase by crediting, they reduce by debiting. So balance brought down, we put it on the credit side, which is 17,200. Then the balance carried down, which is the closing balance, we put it on the debit side, which is 14,300. Then money that was paid to the creditors or the people that are demanding the business was 34,200 here under bank transactions, 34,200. So it reduces by debiting, and when you pay the people that are demanding you, you're reducing on the amount. So we put it on the debit side. We write bank 34,200. Then we see which side is greater. This is greater. So this plus this, we get this. We put this same figure here. And then we get this minus this to get the credit purchases. Yeah, then after here, we shall come here and we add the cash purchases plus the credit purchases, which is 31,300, like that. And what we get is 82,300, and that will become our purchases. So we shall go back in our income statement and we record it, 82,300. Yeah. Then after that, we shall less credit sales. No, we shall less closing inventory. So closing inventory here down, inventory was 15,500. So we less closing inventory 15,500. If we put it in the calculator, what we get is the cost of sales. This plus this minus this, we get this. Yeah. Then after, we shall get the sales minus the cost of sales, and what we get is the gross profit. Yeah. After that, we go to, since we don't have other incomes, in case we had them, we would have first added other incomes before going to expenses. But in this question, we don't have other incomes. We have things like discount received, commission received, rent received, gains on disposal, things like that. But we don't have. So we go to less operating expenses. One of the expenses we have general expenses, which is 22,500,000. Yeah. So 22,500,000. We record it. Then we also have wages, but wages, this is what was paid during the year, but here we had an opening balance and it was a liability. Wages accrued, it was a current liability. So if any expense has more than one amount, you're supposed to prepare its account. Yeah, so we are going to prepare the wages account to determine what we shall put in the income statement. Yeah, so we prepare the wages account. Debit, credit. So here is the table to help us prepare expenses accounts. So in case what is given in the question, in case it is prepaid and it is an opening balance, you debit in the expenses account. In case it's closing balance, you credit. Then in case what is given in the question is accrued, but it's opening balance, you credit. If it's closing balance, you debit. Then all payments that are made during the year are debited. and this is what is going to guide us when we are preparing the expenses accounts. So we have wages. Wages, what was given in the question, it is accrued. The opening balance is accrued under current liabilities. So if it is accrued, accrued is the same as due or outstanding. Yeah. So it is accrued but at the beginning, so we shall credit it. So balance brought down this amount, which is 1,200. And we said all payments made during the year are debited. So these are the cash transactions during the year. So there was wages of 5 million. So all transactions are debited. So we shall come here and put cash 5. Then in case we had any closing balance, we would have treated it accordingly, but we don't have. So we balance this. We see which side is greater. This side is greater. So 5,000, then 5,000. Then we get this minus this. And what we get is what we put in the income statement. So we write income statement. This minus this, we shall get 3,800. So when we go to the income statement, we write wages. And we write 3,800. Yeah. Then another expense we have electricity. Electricity also has this amount, this, and then it has electricity due as a closing balance. So it has more than one amount. We prepare the electricity account. So we come here and say electricity account, debit, then credit. It does not have an opening balance. So what was paid during the year is 4,600,000. So we said all payments made during the year are debited. So we shall come this side and write it was paid through the bank. So we write bank for 600. Then its closing balance is due. We said due is the same as accrued or outstanding. And we said if it is accrued as a closing balance, you debit. So we shall come here and say balance carried down. It is 640. Yeah. Then we balance this plus this. Calculator. It is 4,600 plus 640. 5,240.